What's going on out there? It's October 6th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So bringing in Daniel right off the start here, a lot going on. We're seeing a lot of volatility in the markets. Daniel CEO, analyst, Curzio Research. What's going on, man? How you doing?
Frank, doing well, sir. It's good to be back. Had a fun trip out west to Arizona. And markets are up and down every day. So we were up 400 one day, now we're down 400, just typical stock market stuff.
And how was the trip? How was the flights? Was it crowded? Would you see airports and stuff like that?
Yeah, a few observations like Frank always talks about, to all you listeners, just pay attention to your surroundings. You can get a good pulse on different things. So the planes themselves, the flights are full. Coming back, just to skip forward real quick, Frank, it's a good thing I'm so dedicated to you and working and getting back on track to publish everything because I was in Houston coming home from Arizona, and I was standing next to the desk there where you check in and get into the flight, and they had overbooked the flights, okay, typical. Mm-hmm. They were offering $1,500 in travel vouchers, no blackout dates supposedly, of course, take that with salt. They were going to pay for your hotel that evening. This was Monday. And they were going to pay for all your food and guarantee you a seat on the next flight at either 5 or 6 a.m., which would have been yesterday, to Jacksonville. And I thought, wow, that's a lot of free vouchers. That could be a lot of fun. But I'm so dedicated to all you listeners and everything here that I just ignored that completely.
Yeah, Daniel's so dedicated that he went to Arizona and then he came back, and I don't think he knew that his parents were coming this week to visit him here. So they're here and they're like, well, we're leaving in 3 days. He's like, oh, and his dad goes golfing. So I'm like, I guess we're not going to see Daniel this week. And of course, I came in here really early, much earlier than expected, and Daniel was here. I'm like, hey, make it up for it a little bit, huh?
Hey, when you got a flexible schedule, you got to get things done whenever. But yeah, so the flights are full, which is nice. American, fun stewardess, I ordered a adult beverage to calm my flying nerves. And she made a point to say that they were going to initiate, and this is coach people, I'm not Frank, so I'm not up in the front of the plane. I'm in the back. But she said that they were originally planned to have alcohol back in June of this year, Frank. And now they extended it to January of next year, and she thinks it's going to get pushed further back. Why? Because she said customers are acting too crazy. Now, that was on American. I brought United back. Didn't even ask on them. At least they serve snacks and things. But the wild thing, Frank, is flights are full. You get to the airport. I was in Dallas, Phoenix, and then Houston for a short time, obviously. The airports are like to themselves. You walk by different bars and restaurants, and not everything is open. They're having the same staffing issues. I stopped and talked to a few people there at the restaurants that were open, and it's just your typical same old story. I mean, everybody's hurting for labor and things. Chick-fil-A, when you see a Chick-fil-A line in an airport that isn't extraordinarily long, the airports aren't that busy. That's the easiest tell there. So that was odd, but man, just the nickel and dime. You've talked about how different hotels, travel, cars, rental cars, and flights, man, they just nickel and dime you. I mean, like for me, I was buying a coach seat. It was a last minute ticket. A couple weeks in advance. So very, very last minute on that side. And then you buy exit rows, and everything is just tacked on. So you don't need as much capacity when you cut costs and you can raise prices. So
yeah, it was interesting because even when I flew through Dallas 3 weeks ago, whatever, the airport was empty. I mean, the flight was packed, but the airport was really empty. Like I've never seen it that empty, which is surprising. But you were looking at not just supply chain issues, guys, but it's very, very, very serious, much more serious than people are talking about, which is the labor shortage. You see it, I see it, but for some reason the Fed doesn't see it. A lot of people that you're watching on TV don't see it. And now we're seeing tons of company, which I get data from this all the time. I mean, top CEOs, and this is over the past 3 weeks, have all been warning. And some of them said, hey, we were successful in raising our costs with the high raw material costs. And I don't know if you saw, you talked about early natural gas prices, forget it, in Europe, holy cow. And now what are we seeing? We're seeing oil prices, financials outperform. Well, the market's kind of shitty here, but, what does that mean, right? You're seeing technology companies really take a hit here. And we said why they're more prone to getting hit harder inflation because they're influenced by, CapEx spending, and they can't cut their margins. They have incredibly high margins where cyclical companies can cut their margins a lot easier. And, that's a telltale sign that, this sell-off is inflation. We're seeing the 10-year rise. And, just the sectors that are, like the financials are going to do well, energy is doing well right now, and a lot of technology is selling off. But, it's an indication that, hey, you know what? Inflation is here. And not only is it not transitory, my favorite word for transitory, but it's getting progressively worse, and it's going to get a lot worse. And even if they pass the infrastructure bill, it's really going to get worse because right now everything's like totally bottlenecked. So I mean, it's really crazy out there. It really is.
Yeah, absolutely. And you know, you talk about your great network and contacts. I have just wonderful people in relationships out in Arizona, spread across a lot of different sectors, from residential and commercial real estate to construction and landscaping. And I got to catch up with a lot of these people. And to your point, Frank, we've been on this theme for a while with companies that have pricing power. And I was talking to a gentleman with a construction company, and he was highlighting the fact that several months ago and leading up over the past several months, he had great buying power because of his company. And he wasn't bragging. He's just, you know, he's a hard worker. He's a very smart guy. He's got a great business. And he was talking about how he would just go buy raw materials and he would take other people's orders, basically. What you've talked about with the container ships, how some companies like Amazon and the big dogs, they can just afford to pay more. You know, they'll eat or take a loss or cut into their margins to a certain point just to get their goods on a ship and get them over here and get them on time. You can take market share there. The interesting thing of what he said in this on the construction side was, you know, I used to just have to pay up and buy. Well, now the suppliers are saying, hey, it doesn't matter what you want to pay. We don't have it yet. So you can take delivery in 12 weeks or 16 weeks or not, but that's up to you. So now, you know, think of this kind of this river analogy. If you have an oil spill or anything like that at the top of the river, it takes some time to funnel through and you know, get down to the bottom. So we'll see that, and we need to be looking for that over the next several months on supply chain issues. Like you said, Frank, they're only going to get worse. But that's just one of the things. Now, these are private companies I'm talking to, but we can, as investors, you can look for these same situations in publicly traded companies. A gentleman I talked to with pool and landscaping, they had to limit their sales teams to selling certain jobs. And we're talking about building up your backyard like you want it. So people are spending a lot of money. I mean, sometimes several $100,000 to do a pool, landscaping, get their backyard just so they can entertain. Well, think about this, Frank, when you have to limit your sales teams to stop selling so much because you can't promise 6 months, 8 months down the line. You don't know what the labor, you know, and they're talking to, he's having concrete guys and mason guys and different things come to him and say, hey, our prices are increasing in another week. And these aren't the first price increases. So we have, you know, as investors, you have to pay attention. It's going to get worse on the supply chain side and the inflation, a hell of a lot worse before it gets better. So something we need to navigate in our portfolios as well, and you at home.
And I want to break this down in simple terms because you hear this, you know, the supply chain issues and the chip issues, and a lot of you are shopping for cars, and you hear, I need to break this down for you to understand of why this is a massive risk to the overall market. If you look at the past 2-3 weeks, GM, 3M, Nike, Sherwin-Williams, Eaton, I mean, all these companies have come out and said, like, raw material prices are skyrocketing, massive labor shortages that, you know, they're basically warning and they're all saying that things are getting progressively worse. I don't know if that's priced in. But when you look at Ford come out and their sales are down 17% year over year, again, that's why they're talking up their EV portfolio. We talked about that a lot. And they actually said, the CEO for Ford and CEO for GM were lying to you 3-4 months ago, which you pointed out, because they were like, oh, it's going to be a second quarter. We'll be fine third quarter. We're in the third quarter. Numbers are getting worse. Fourth quarter, numbers are going down further than the third quarter. So we haven't hit bottom yet, right? So when you hit bottom, that's kind of a time to be like, okay, things are getting better. We could scale back in. These stocks haven't really gotten hit yet because everyone's so, you know, the EV portfolio, even though it's 2030, you know, everyone's excited about it. But big news came out of Coca-Cola. They said, I think it's the first time in their history, so they're going to ship through dry bulk. They usually ship through containers. And this was yesterday. And to me, I thought this was amazing because the containers, ships that they ship through, the prices went from $2,000 per container to $14,000, so up whatever, around 7x. And they're like, look, we're going to do dry bulk shipping instead, which is used for raw materials. And they said, you know, through 3 different ships or whatever. And even those prices for dry bulk, and if you look at the dry bulk index, which you hear all about, that index went from 1,000 to 5,000 over the past year. So it's cheaper, but you're going to see the dry bulk index absolutely explode. Now, Coca-Cola is one of the biggest companies in the world, and, you know, big supply chain, logistics. And if they're doing this, other companies are doing this, right? The other big guys are going to do this. Asco Noble, a company you maybe never heard of, they are one of the largest paint manufacturers in the world. They did $10 billion in sales and located in the Netherlands. CEO said, buy paint right now. Get in your car and buy paint right now. He goes, because we don't know if we're basically going to have it. Then you have Lennox Group, CEO says, raw material cost inflation at 20% and prices are going to rise about 9% year over year this quarter. Hopefully that, that's going to offset costs. But this is what he said about steel. It's very constrained, which we know. But he goes, the flash steel cost is 4x what it was 18 months ago, as major players are trying to keep supply down, which means they're keeping prices elevated. So he says it's tough to get steel. He goes, then the suppliers, whether it's motors, compressors, they're trying to manage their costs. So what happens is steel suppliers just won't make deliveries because they find a spot buyer and they're willing to pay for what was supposed to be our delivery, and that's rippling through the supply chain. So right now, what does that mean? It means the largest players are willing to go out and lose money to lock in container ships, dry bulk, and all of this, pricing out companies like maybe Dollar Tree and a dollar store where they don't have high margin products, but these guys are willing to lose money and steal some of these things legally, basically. And what does that say for Christmas, which is where the biggest quarter for so many companies where you have the most sales day, right? So if I were you, when it comes to holiday season and Christmas, you make sure the expectations, you set them low for your kids. I mean, tell them, hey, we're going to go on a vacation or something, because you can get that done. Buy them a basketball or a soccer ball because they're always in stock. But forget about those toys, because those hot toys, there's going to be like 2 or 3 kids in the United States that gets them. They're not going to be able to get, even if you order now. Gift cards to Roblox or Fortnite. I mean, stuff like that. But the hottest toys, forget about it. I mean, Sony PlayStation 5 came out last year. You still can't get one. I mean, you can get it if you pay 3x, 4x for it, but it's still not in inventory anyplace. So you're looking at the holiday season coming up. These guys need to stock up. They don't have inventory. I'm interested to see what Best Buy says, who raised their estimates. Dick's Sporting Goods, how, Nike said, hey, we're in a lot of trouble. Basically their stock got hit. So, a lot of manufacturers don't do Taiwan and Vietnam and stuff, and their COVID restrictions are crazy. Guys, pay attention to this, because on the other end, Daniel, is, what's working? Companies that have pricing power. And I could tell you who have pricing power and stocks that are doing well. And this is a theme that we've had for a very long time, right? Where we said buy the reopen trade. If you're looking at Delta, the numbers are getting better. Every state right now is below 90% ICU occupancy, which is great. I don't know if you guys saw Avis. That's a company in our portfolio. Dan, where we buy that? I mean, it's 130.
Yeah,
I mean, we're up about 500% on that name. Royal Caribbean, full fleet. They said full fleet's going to be operational, running early next year. Caesars Entertainment said EBITDA record high in Q3. That is incredible, considering international restrictions are still in place, right? At a lot of places, right? And mask mandates are still in place, which people hate wearing masks. So when this stuff gets lifted, and it will, and it could take 6 months, it could take, I don't know, but it will get lifted, a lot of this stuff. And what it does, these guys have such pricing power, it's incredible. I mean, even Delta lowered their estimates last month and then revised them higher this month. That's how quickly it changed. And they said 2022 bookings are going to surpass 2019 levels, which are the best levels on record. The stock was over 60, then it's 43 now. Not apples comparison, because they did take out more debt and stuff and probably more shares outstanding. But you're seeing these companies, right? I mean, it's back and forth. Oh, Delta, and they're going to open. People are dying to get out there. International travel. I mean, that's a pretty big theme, but you have to be careful of the companies that don't have pricing power, which are going to be a lot of restaurants, I would think dollar stores. That's really the biggest theme. That's the biggest takeaway of what's going on with supply chain issues and what's going on with inflation right now, to me.
Yeah, absolutely. And they're going to have to navigate the waters, because last week I was talking about Dollar Tree and Dollar General as a way to play the discrepancy and the income gap continuing to get wider between the rich and the poor, and those. But like I said, Dollar Tree is even going to sell prices or goods for higher than $1. Pricing power is a big deal. The casinos are good. In fact, when I was on the way home on the airplane, a gentleman sitting next to me was coming back. Him and a group of friends were in Vegas for the weekend, having a ball. So yeah, people are dying to get out. No question there. And people are still flush with cash. I mean, even though some of the unemployment things have run out, you still have a lot of working power and money, because a lot of the people that lost their jobs were in the service sector. Not that that's not important, but everybody got checks regardless if they lost money or lost their jobs or not. So yeah, that's a big thing in the ripple through as the economy. Where do you think interest rates are 1.5% on the 10-year?
Yeah, look, went over 1.5%. That's why the market is hurting. That's why you're seeing a lot of volatility. That's why you're seeing it come down. It is the 10-year. Keep an eye on 10 years. Interest rates go higher, it's going to impact a lot of different industries, especially housing. I'm in the market for getting a loan right now, and it's I'm trying to lock it in, because they've gone up, and it's going up to the point where it's meaningful. So how much higher they're going to go, I don't know, but that's going to result in, the housing market might get hit a little bit, fewer loans being made. Again, higher interest rates, it's more difficult to borrow. You're taking money out of the system. You're taking leverage out of the system because money's not really free.
Fun teachable moment here. You doing a 30-year fix, Frank?
I'm doing, I'm going to do a 30-year fix, yes.
Are you going to ask for a 40 or a 50?
No.
Just to have fun with
40 or 50. I don't even have to have 40 or 50.
No, they don't. Because, it'd be too good. Think about that.
They have 50-year bonds. Didn't they do that with Microsoft or something? I thought
probably,
yeah. Oh, it's crazy.
We're not going to get off on this tangent, but you could always print the $1 trillion, platinum or palladium coin they're talking about with the debt ceiling going on. But the 30-year fix is fantastic because you lock in a interest rate today for 30 years, people, and you're going to pay that back with inflated dollars. So your house that you can go in and get shelter from, you're going to be paying that back. The amount of dollars in your mortgage every single month that you pay now is not going to buy you near the same amount of goods in 30 years from now. That's why it's a great deal to lock in a fixed rate at such a low rate, and you should really think about that if you're in the market, such as Frank is.
Yeah, and Microsoft that was in 2015, 40-year bonds. They probably did it again. That's crazy. But let's change tunes here because we saw Tesla meet their estimates. We know the valuation's insane. And I was just, listen, I'm not picking on this person who's JPMorgan analyst that covers his stock. And he raised his target price from 180 to 215. And the stock is at whatever, 780, close to 800. The average sell side price ranges from 215, which is the low end for JPMorgan, and another boutique firm at $1,591, $1,591. And the stock is again, it's around 780 today. I have to ask you, are the sell side reports, are they becoming meaningless? Because when you do see upgrades and downgrades, it does move the market. So I'm not going to say it's not trading opportunities. But when I see something like this, where that range is that big, and you're looking where fundamentals don't matter anymore, right? If you're looking at how do you look at AMC? How do you look at GameStop? How do you look at these companies? And I don't know if JPMorgan, that analyst was using Jamie Dimon's math on it, where he says there's no intrinsic value on Bitcoin. It's zero. Maybe that's it, where he's getting it from. I have no idea. But it's hard because, you're looking at these estimates, which are going to go up tremendously by like 2024. And even at their estimates, it's going to be trading like 125, 130 times forward earnings. So, I don't know if these things even make sense anymore. I know there's a lot between investment fees, which we talk about all the time, which is a big bias, right? Especially small caps. You're not going to cover small cap unless they're going to get investment fees. They're not going to waste their time. So, I'm curious. I'm going to ask you, are these reports, and these guys are brilliant here, but when you see ranges like this and you're seeing so many times that fundamentals don't matter, what's the value of these reports?
I think meaningless is a strong word, but you're somewhere on track there. I just have a limited vocabulary, so I can't pinpoint it exactly. But you just listen. The guys on the sell side, they, like you said, they're brilliant. They have access to great information and up-to-date information. However, they're biased and human too. It's hard to admit you're wrong. It's hard, when you in the investing world, Frank, when you're wrong. You don't say you're wrong, you're early. So if you have a price target on something that's 300 and it's 700, it's like, well, just wait. I'm just a little early, my thesis will play out or whatever. So you just have to kind of take these kind of company by company and not just paint with such a broad brush.
You know what I don't understand?
Because you got Tesla bulls, you got crazy Tesla bulls that, whatever, pick a price target,
bulls
10,000.
And bears, crazy bears. It's fraud, batteries on fire. Everyone's just, there's so much emotions, especially on social media with this, but the JPMorgan, if I was you, just, again, you're probably a lot smarter than me.
Wait a minute, you talking to me or the audience?
I'm talking to the audience.
Okay.
You're definitely smarter than me. I'm talking about, the analysts at JPMorgan here, you could make the same case by putting a 450 target price on it.
Right.
And people saying, wow, that's really low, then 215 and looking like a complete idiot. Right. So I think for job security, and it didn't work for Goldman because they had an analyst on him, which he threw out the door because he kept, and they're like, Tesla's going to be borrowing money and borrowing money and borrowing money. That's investment fees. And they threw him out the door. And now they hire a guy and he's got, one of the highest estimates on the stock. I think it's, not the highest, but I think it's like 880 or something like that. Much higher than it is today. So you have to be careful. But it's almost, even when you look at this, when they have like, say, what does Goldman call it? The conviction buy list. So they have a certain amount of names on the conviction buy list where once they remove it, they have to put one on it. Just like they have to have a certain percentage of sell rating. So once you'll see in a sector that they'll say they'll downgrade to a sell, they're going to upgrade another one to a buy or take it off from a sell to whatever. Which kind of means, like right there, it tells you there's a lot of bias behind it, right? You're just doing it because that's what's required from a formula. It's not required where we really think. And I've talked to analysts, and they've said that on sell side. I say, look, we have to provide some sells on this. That's, when we cover a whole industry. But when I see stuff like this, it's crazy. But I don't know. I don't know. I look at these sell side reports. A lot of these guys are really smart. They do fantastic research. But when it comes to target prices and something, I mean, it's so subjective. You could just change one number in your model and come up with whatever it's kind of like technical analysis. Just move the chart out another month, another 3-4 months, 6 months, 9 months. You're going to get what you want to see. And you could say, hey, look at this chart. And when it hit here, it hit here, it hit here, and it goes higher. And then, until it doesn't go higher anymore. And, they don't report back with their, performance or anything. You don't see a lot of guys like that have performances that have technical analysis. They don't have like track records and stuff like that. But anyway.
And in their, real quick, and in their defense, to come to Wall Street's defense, you have to be, how do you say this? You have to be willing to change your mind. So what are they up against that they weren't up against recently? Now, if you've been wrong on Tesla, you've been wrong for a while. But now you have this meme stock atmosphere. Mm-hmm. You have the retail investor getting a lot more involved. You have internet channels like Reddit and Twitter and everything else blowing up with everybody from Dave Portnoy, who has massive followings, to really smart guys in the investing world getting huge followings, to just crazy pump and dump guys. But you have to pay attention to that as a Wall Street analyst. Maybe you don't have to let it deter or really control your thinking, but I think a lot of that is they're just ignoring it. And they thought, this will pass. This is just a season. And it still may be, but it's going to be a hell of a lot longer season. It's like the Game of Thrones. Winter is coming. I haven't seen all that, but you don't need to listen to that very long to realize winter is not like a 3 or 4 month season in that show. It could be forever.
Quick question.
Uh-oh.
Out of the 3 car makers that I'm going to give you.
Okay.
Tesla, GM, Ford. Which one do you like the most right now today? And considering Tesla had great numbers and there's more chips that go into those cars than anything, which is very interesting to me of why they're able to produce. And again, they're producing on a much, much smaller scale than these guys, which we have to take consideration. But which one of those companies would you buy right now?
GM. You want to know why?
I want to know why. I'm curious.
Politically speaking, people, this is the easiest layup here, and I'll go out on record. We can timestamp this, Frank. We can either make me look great or make me look silly. Engine number 1 has taken a stake in GM. Why do I bring up engine number 1? Because engine number 1 is the small activist firm, and I say small. I don't know what their management is, but they're small in the big players, because they are the ones that took over and got board seats at ExxonMobil, one of the biggest oil and gas producers.
By convincing how?
BlackRocks. Did they go hit the campaign trail and get the average individual investor to buy into their ideas? Absolutely not. They went to BlackRock, who is a multi-trillion, are they 8 to 10 trillion, let's say, pretty comfortably.
A lot of them are all like 5 trillion plus now, Fidelity.
Yeah, and BlackRock, who is one of the biggest asset managers in the world, if not the biggest, have decided to be woke under, is it Larry Fink that runs that? I always get those guys confused between BlackRock and the other big ones. But anyway, now and full disclosure here, I threw out Dollar Stock Club because of that. In Dollar Stock Club, I recommended ExxonMobil. And what did it do? It immediately went down about 15%. So thank goodness we have 25% stop losses on that one. But now it's basically trading flat. I think we're in around 61 is where I recommended it. It's basically 60 today. But I'm doing that from a fun political standpoint, because when you have those kind of asset managers become politically activist, that means, Frank, money is going to flow into those stocks, in my opinion.
It's not just flowing into those stocks. Look how brilliant they are, because now what they're doing.
Who's brilliant?
Engine. I mean, they're brilliant, because you would think like, oh man, they're going to force, like, even that was even my first instinct, like, well, with Exxon, they're going to force an oil company to drill less, which is what? Less supply. Energy prices are taking off. Now they're on the board. They own shares. They're buying shares and stuff like that. But you're all in these energy companies. Probably carbon credits is stacking up on those things. Forget it. I mean, that industry is going to just go crazy. It's starting to go crazy. There's actually ETFs now, carbon credit ETFs. You can see a lot more issues coming out, even security tokens coming out. But yeah, I mean, those guys are geniuses. They really are. They convinced everyone about something that, whatever, whether you believe in it or not, it's here.
They didn't convince everyone. They convinced BlackRock to vote on their side.
And also a lot of the, like, that's 3 or 4 of the largest players. And those guys have to vote right now. Every company, every single, if you look at the polls, which is all any of these companies and politicians care about, they're saying right now that the latest polls that 70-80% care about this now. They're going to only refer, green companies, and buy them. And it's a massive topic, and it's resulting in every single company buying in, whether you like it or not. And we covered that in the past. Now, we have 5 minutes left, and I want to talk about what Jamie Dimon said, because what Jamie Dimon said about Bitcoin, again, he's like, it has no intrinsic value. It could go to zero. And he said this about 4 or 5 days ago. And I think it increases the bullish case for Bitcoin because he doesn't understand it. And again, intrinsic value is kind of funny being a fundamental guy. If you really focus on intrinsic value, you would have never had, I wouldn't say you would have never had a big winner, but you would have never had like Microsoft or any of the massive technology companies, whatever you using this, you use this kind of cash flow analysis, present value, future cash flows. It's trying to provide, a valuation using numbers. So it's a fundamental way to calculate the valuation of an asset. But if you're looking at that definition of intrinsic value, so that means gold has no intrinsic value. That means art, collectibles, they don't have intrinsic value. But they have incredible value. I mean, you're looking at Bitcoin is the psychology behind it, where this is people don't trust central governments, and it's getting worse. And the younger generation is growing up you're looking millennials, you're looking at Gen Z, you're looking at all these groups. It's getting worse and worse. We're even seeing it on this scale where how did you go from $1 trillion to $3.5 trillion? They're just throwing trillions out there. And now, over 30 trillion worldwide has been spent. And yet you're still keeping interest rates low across the board, even though we have GDP near record highs, we have earnings at record highs, we have home prices at record highs, and we had stocks at record highs up to like 2 weeks ago. Well, maybe 3 weeks ago, a little before December. And you still like pedal to the metal, right? So for me, the fact that he doesn't understand that, and that's what he's valuing it at, and he's not valuing it as something that's incredibly valuable to so many people. I got an email from a very good source, and he made a lot of sense. And he said, why is China cracking down on Bitcoin? And they keep announcing the same thing. We're really cracking down. I mean, next week they're going to announce that they're banning Bitcoin, which is going to be the 6th time they're banning it this year.
Yeah.
Why? And this is a good theory, not mine, his theory. But when you have the Evergrande situation, which has rippled through that entire real estate, which has rippled through a ton GDP, their economy, when the shit hits the fan, there's a lot of people that are going to want to get that money out. Mm-hmm. And if you close that market, there's no way you can get that money out. But because why are they, like, just the timing of it, and it made sense to me, whatever, you can think of whatever you want, but why do they keep announcing the same news? Just to see the hits that Bitcoin's taking and where it is today, guys, it's at 54,000 now. I mean, our crypto intelligence portfolio is absolutely amazing. I'm so glad for the people that subscribe to that. They're doing very, very good. Lots of great names in it, but crypto is here to stay. Security tokens, NFTs. Not all NFTs. A lot of people think it's bullshit because you see these stupid little digital things. But you know what? I'd want to buy something that's original digitally that's from Tom Brady, Michael Jordan. That's value. I think that's incredibly valuable. So there is a good market. That market's starting to explode. DeFi is already big, getting bigger and bigger and bigger. Just improving on smart contracts. I mean, the technology behind everything that's going on in crypto, there's some amazing companies, and I just feel like still Wall Street's so behind the curve. And when I see Jamie Dimon, who's a bank guy, again, we're talking about intrinsic value, one of the most powerful people in banking, CEO of the largest bank in the world, the fact that he still doesn't get this. And 55% of the banks are now in it. U.S. Bank just said they're going in it. U.S. Bank has $7 trillion in assets. They're the fifth largest in the world. So they're going to take custody now, for Bitcoin for clients. Their clients want it. This is here. This is a trend you really need to get into. But the whole intrinsic value on it, instead of being like, wow, Jamie Dimon said this, to me, it strengthens the bullish case because you really don't understand why people are buying this. It's much more important than intrinsic value. And it's incredibly valuable to move your money different places, to keep it safe, and to avoid a lot of the stuff that, in fiat currencies, where you're just going to continue to print money, which we see. If they're still printing money now with everything at record highs and interest rates, they're going to. When is it going to stop? You're not going to see it stop, and that strengthens the case for Bitcoin.
Absolutely. I don't understand the severe of it's either worthless or
exactly.
it's invaluable. It's so great. I get the argument. Same way with gold. Hey, I believe Warren Buffett made it very popular. Gold doesn't pay you a dividend. It doesn't do anything. It's just a shiny metal that you dig a hole in and put in. That's not false. It doesn't pay a dividend. If you have gold in your backyard, that's great. But to go as far as say that that's worthless when you have, as long as humans have been around in financial records, which is about 6,000 years, it does hold value. Now, you can argue what that value should be. You could say it's overpriced. You could say it's undervalued. But just to say that it has zero value is ridiculous because you're just ignoring human nature and reality right in front of you. So is Bitcoin overvalued at 54? I don't think so. But if you think so, that's okay. But it's certainly not going to zero anytime soon because you have so many people. Bitcoin is more of a vote against central banking and authoritarianism and just total control of everybody. It's just a freedom cry on a financial. It's people voting with their wallet to a certain extent. And it's also people taking risk reward and saying, hey, this is speculative and I could make a ton of money. That's all fine. It's not a big deal. And it did, I have to say, Frank, I have to give a little credit where credit is due. We had Jay Powell out of the Fed chairman and Gensler or whatever for the SEC, both at least came out and said that they weren't going to ban crypto like China did.
That's when you saw the takeoff.
And that also helped momentum because that is a worry. They can do that, just like Ray Dalio, the billionaire hedge fund manager, has warned that is a possibility. Remember, if they can shut down the entire freaking economy, they can do anything. So don't.
Yeah, it's a risk.
Exactly.
You can't sit here and say there's no. But it's intertwined with so many different banks and everything that
just because it's a percentage risk doesn't mean it's a high percentage. Yes, it's a risk, but is it a risk to keep you on the sidelines or keep you from taking action or gaining exposure to this sector? I don't believe so. So keep that in mind. So Bitcoin is just a vote of confidence and freedom more than it is, and a lack of trust in central banks because of what you're talking about printing endlessly. So
and guys, look, you have a limited supply, and you have almost like a cult-like following that's not going to sell, that wants to hold this. And I've talked to some of these people, and they are holding. They are holding. They don't care if it goes down to 25,000, 17,000. If it goes to 80,000, they hold, right? So now you have that cult following that was in early, and what do we have going on today? Is institutions are going all in. And that's where the big money comes in, where the billions of dollars gets invested in this. And that's why you're seeing the Silvergate, a major player now. You're seeing Galaxy. I mean, these are stocks that you could buy. These guys, I mean, just look at their numbers and how they're growing tremendously. Even the miners, if you're looking at Riot or you're looking at Marathon, I mean, now that China's basically shut down, I mean, the margins, the estimates that are being raised, they're being, like, EBITDA is being almost doubled from the previous estimates a couple of months ago. That's how much these guys are growing, because not only are they, just mining for Bitcoin, now they're keeping the Bitcoin on the balance sheets and Bitcoin's going higher. So you look at, there's a lot of stock plays, there's more and more coming out. Again, the institutions are here. You're going to see ETFs pretty soon, I believe so. But it's still early in this trend. And man, there's so many great technologies, which a lot of you guys could find in Crypto Intelligence newsletter, which, you know what, I'll try to discount that. Again, I didn't have this, it's not, none of this is scripted or anything, just a couple topics to talk about. But when I believe that, there's money to be made in certain products, that's when I like to sell them and pitch them the most. And just the ideas that we're seeing right now are really fantastic. A lot of new great ideas, especially in the security token industry, which is really opening up. And I know you guys saw our news who listened to that we're going to be trading on a T0 platform probably around December-ish, which is very, very exciting, provide more liquidity and all. You could buy our CEO token, Curzio Equity Owners token, give you an equity stake in the business. But really, really cool stuff, and all that stuff's opening up. So, I'm in agreement with you, Daniel. A lot of topics, a lot of volatility in the market. Again, there's money to be made. Focus on the companies with pricing power, right? I mean, that's what you say, Daniel. Like, there are ideas that I like a lot that are doing that, again, the travel-related stocks, you've seen those numbers start to explode. The economies are opening, or everything's getting better from Delta. Those numbers are getting much, much better. And I think you're going to see the international markets begin to open up, at a limited capacity. And that's going to result in a lot of these companies, that a lot of these travel companies do have pricing power, that really are going to take off from here. And we're seeing it on the front end, like with Avis, Rent-A-Car, stuff like that. But I think you're going to see it a lot more, even with just like the Expedias and just all the casino stocks. So that's probably a great place to be in, at least over the next few, I would say, 6 to 12 months.
Yeah, I mean, Christmas might be canceled because of supply chain issues, but we're still set up for a Santa Claus rally. So be cautiously long. Man,
I'm afraid for the one he's going into earnings season. We'll see if that happens. Absolutely. But definitely a lot of trouble, a lot of labor shortages, and again, so a lot worse than I think people are talking about on TV. So you guys just be careful. If you're buying right now, last thing here, I'd like to keep this 30 minutes. We're running a little bit over. If you're buying right here, buy small positions. Don't take a full position because there's a likelihood that your company is going to warn, and the growth multiple that are on some of these companies, if they warn and see slower growth, you could take a 20-25% hit right away. And if you have a small position, that's not a bad thing because you could add to it, improve your cost basis, and that's fine because you're in for the long term. Just be careful going into this earnings season. We've already had like 7, 8, 9 major companies warn, and I've seen probably at least 50 CEOs of comments that I've seen that are like, this is getting worse, not better, which may lead to a lot of warnings going forward. So just be careful. It's a very dangerous market. A lot of this stuff is not priced in yet, but there are going to be clear winners and losers, and we'll try to give those to you through our portfolio. So Daniel, thank you so much for coming on.
Absolutely. Cheers. See you next week.
So many different things. And that's it for me. Again, really appreciate all your support, questions, and comments. FrankCurzioResearch.com. Daniel, email.
Daniel@CurzioResearch.com.
I love when you say it, even though I know it. Guys, that's it for me. Have a great interview coming up tomorrow. Appreciate all the support, questions, comments. Again, FrankCurzioResearch.com. We're here for you. And I'll see you guys tomorrow. Take care.